Welcome to a deep dive into the U.S. economy. It's been surprisingly resilient. We're looking at a recent podcast episode titled Resilient Growth, and it explores this unexpected strength.
Yeah.
And you know what? Well, everyone's focused on tech valuations just going through the roof. Something else is catching everyone off guard.
Hmm.
Dividend stocks are making a comeback.
It's true. A lot of investors are really scratching their heads over that one.
Yeah.
We'll also be taking a look at some predictions about the semiconductor industry, like which companies are going to be on top in 2025.
Okay. Sounds good. But first, let's unpack this whole resilient economy thing.
Great.
The podcast points out a pretty striking fact. U.S. productivity growth,
Yeah.
it's actually outpacing both Europe and Canada.
Wow.
We're talking consistent quarterly growth of at least 2% for the past 5 quarters.
That's pretty impressive.
It is, especially when you think about all the, global economic headwinds everyone's been bracing for.
Right. Yeah.
So what's the secret sauce here?
Well, what's interesting is this growth isn't just a random blip. It seems to be driven by some pretty fundamental shifts in how businesses operate.
Okay.
The podcast quotes Federal Reserve Board member Adriana Kugler,
Okay.
and she emphasizes that productivity growth is absolutely essential for a stable U.S. economy. It allows for faster growth without overheating.
Okay, I can see how that works in theory, but how is it actually playing out? Like, what are companies doing differently that's contributing to this productivity surge?
Well, the podcast highlights an interesting perspective from J.P. Morgan's chief global strategist, David Kelly.
Okay.
And he points to the labor shortages that we saw during the pandemic,
Right.
arguing that those shortages actually forced companies to innovate, find ways to do more with less.
Interesting. So it's like that classic case of necessity is the mother of invention.
Exactly.
So instead of just waiting for things to go back to normal,
Yeah.
companies had to adapt,
Right.
find new solutions,
Yeah.
which ultimately made them more efficient.
Exactly. Think about all those self-checkout kiosks popping up everywhere.
Yeah.
Or how many jobs now require employees to handle a wider range of responsibilities. These changes, while born out of a difficult situation,
Yeah.
have led to some significant efficiency gains.
So it's like the U.S. economy got a bit of a forced upgrade,
Yeah,
and now it's reaping the benefits.
I like that.
All right, let's switch gears a little bit and talk about those dividend stocks that are making a comeback.
Okay.
I have to admit, this isn't something I would have predicted,
Yeah,
especially with all the excitement around tech stocks.
right.
Why are investors suddenly so interested in dividends again?
Well, this is where it gets really interesting, because it seems to be tied to a growing sense of caution among investors. Those sky-high tech valuations.
Yeah.
Some are starting to see those as a sign that we're maybe reaching a peak,
Okay.
and they're starting to crave a bit more stability in their portfolios.
So are dividend stocks suddenly the safe haven investment, like the reliable bond that your grandparents always told you about?
That's a great way to put it. Bank of America is even predicting a 10% increase
Wow.
in overall dividends for S&P 500 companies by 2025. And what's really surprising is that even tech giants like Meta and Alphabet, companies that are typically associated with growth and innovation,
Right.
they're starting to pay dividends.
Okay, so that is a pretty big shift.
Yeah.
What do you think is driving these tech companies to offer dividends? Is it just a way to appease investors who are maybe getting nervous about the volatile tech market?
It could be part of it, but it also signals a broader trend.
Okay.
These tech companies are maturing.
Yeah.
They're sitting on massive cash reserves.
Right.
Paying dividends allows them to share some of that wealth with their investors while also signaling confidence in their long-term stability and profitability.
So it's like a way of saying, hey, we're not just a high-flying tech startup anymore. We're a solid, reliable investment.
It's about shifting perceptions,
Right.
attracting a wider range of investors.
Okay. Now let's turn our attention to another sector that's generating a lot of buzz, semiconductors.
Yeah, the tiny chips that are quietly powering our entire digital world.
It's true. And right now, the undisputed leader in this space is NVIDIA.
For sure.
They're riding high on the wave of demand for generative AI.
Sure.
And their latest earnings report, it's nothing short of astonishing.
Right.
Revenue is up 94% year over year, and their earnings per share have skyrocketed by 110%.
Wow, that's incredible.
Those are some serious gains.
Yeah.
So for those of us who may not be totally up to speed on the intricacies of the tech world, what exactly is generative AI, and why is it driving such massive growth for NVIDIA?
So generative AI is essentially a type of artificial intelligence that can create new content, whether it's text, images, music, or even code. And NVIDIA's graphics processing units, or GPUs. They're particularly well suited for the complex computations required for generative AI applications.
So it's like NVIDIA has the secret sauce that everyone needs to unlock the power of AI.
That's a great way to think about it.
But NVIDIA can't be the only player in this game, right? There must be other companies that are well-positioned to benefit from this semiconductor boom.
You're absolutely right. The podcast actually highlights a list of the top 10 companies projected to see the biggest revenue growth in semiconductors by 2025.
Okay.
And guess what? NVIDIA is still at the top,
At the top.
with a projected growth rate of a whopping 54.6%.
Wow.
It's clear that NVIDIA is a force to be reckoned with.
Yeah.
But there are other companies making significant strides. One to watch is Micron Technology.
Okay.
They're betting big on something called high bandwidth memory, or HBM, which is in high demand as AI and data-intensive applications continue to explode in popularity.
Okay, so I'm getting the sense that HBM is kind of a big deal, but I have to confess I'm not entirely sure what it is. Can you break it down for us non-techies? What is it about HBM that makes it so important for these new technologies?
Well, think of it this way. HBM is like a superhighway for data, allowing for incredibly fast data transfer speeds.
Okay.
And as AI and data-intensive applications become more complex and require more processing power,
Right.
that fast data transfer becomes absolutely crucial.
So Micron is essentially building the infrastructure that will allow these powerful AI applications to run smoothly.
That's a great analogy.
Okay.
And then we have TSMC, the Taiwan Semiconductor Manufacturing Company,
Yeah.
which is a global powerhouse in chip manufacturing.
Right.
They're projected to see a growth rate of 26%,
Wow.
which further solidifies their role as a leader in the semiconductor space.
Okay, so we've got NVIDIA leading the charge, Micron building the data superhighways, and TSMC holding strong on the global stage. This semiconductor landscape is starting to feel like a high-stakes race.
It is.
And I'm getting invested in who's going to come out on top.
Yeah.
But surely there must be some challenges and potential risks along the way, right?
You bring up an important point. While there's a lot of optimism surrounding these trends,
Yeah.
we need to be realistic about the potential for things to, slow down or even change course.
So what are some of the factors that could potentially throw a wrench in the works? What should we be watching out for?
Well, remember all those pandemic-era factors that we talked about earlier? The stimulus measures,
Right.
the increased technology investments,
Yeah.
and those rock-bottom interest rates.
Yeah.
Those are like tailwinds
Okay.
pushing the economy forward. As those tailwinds start to fade, we could see some of that rapid growth slow down.
So it's like the sugar rush is wearing off.
Exactly.
And now the economy needs to figure out how to sustain its energy levels on a more balanced diet.
I like that. That's a good analogy.
What else should we be mindful of?
The semiconductor industry's heavy reliance on AI demand is another factor to consider.
Okay.
While the AI revolution is incredibly exciting,
Yeah.
there's always a risk that the hype could outpace reality.
Right. Leading to a potential market correction.
So it's a bit of a proceed with cautious optimism situation.
Yeah, I think that's a good way to put it.
But even with those potential challenges, it sounds like the U.S. economy and those dividend stocks might be in a surprisingly strong position.
I'd agree with that assessment.
The key takeaway here is that while we should definitely be aware of potential headwinds,
Right.
we shouldn't let them overshadow the positive trends and opportunities that are shaping the future.
Absolutely.
It's all about finding that balance between being informed and being optimistic.
For sure.
But before we get too far ahead of ourselves,
Yeah.
let's take a moment to digest all this information. We'll be back in a flash to explore how these trends could translate into actionable investment strategies for you. Stay tuned.
Sounds good.
Welcome back. Now that we've laid the groundwork and you have a better understanding of the current economic landscape,
Right.
let's explore how you can actually use this knowledge.
Okay.
How can you translate these trends?
Into actionable investment strategies.
That's the million-dollar question, isn't it?
It is.
I mean, it's one thing to understand these trends, the abstract,
Yeah,
but it's quite another to know how they might impact your own financial decisions.
exactly. So let's start with those dividend stocks that seem to be making this surprising comeback.
Okay.
What makes them potentially appealing as an investment strategy right now?
Well, one of the biggest draws of dividend stocks, particularly in the current market,
Yeah.
climate,
Yeah.
is their stability.
Okay.
While tech valuations are constantly fluctuating,
Right.
The market, it feels like a bit of a roller coaster.
It does.
Dividend stocks offer that sense of steady, predictable returns.
It's like they're offering a bit of comfort and security in a world that feels increasingly unpredictable.
Precisely. And that's exactly why they're attracting so much attention right now.
Okay.
Investors are seeking a safe haven amidst all the volatility and dividend-paying companies, especially those with a solid track record of consistent payouts. They fit the bill perfectly.
And remember how we talked about even tech giants like Meta and Alphabet getting in on the dividend game?
Yes.
That seems to add another layer of validation to this trend.
Absolutely. It suggests that even these companies that are known for growth and innovation, they're recognizing the value of offering stability and consistent returns to their investors. It's a way for them to signal confidence in their long-term prospects. While also appealing to a broader range of investors.
But let's not forget about the semiconductor sector, which seems to be the engine driving a lot of this technological innovation that we're seeing right now.
That's true.
While dividend stocks offer stability, semiconductors represent that growth engine of the future.
You're absolutely right.
So how do these two seemingly different investment approaches, dividend stocks and semiconductors, how do they fit into a broader investment strategy?
That's where things get really interesting.
Navigating these two worlds requires understanding the key differences in their appeal. So, unlike dividend stocks, where stability is the primary attraction, semiconductor investments, they're about identifying companies with disruptive technologies and strong growth trajectories.
So it's less about steady returns and more about betting on the companies that are going to shape the future.
Precisely. It's a bit like the difference between investing in a reliable utility company, that, will steadily generate income, versus investing in a cutting-edge tech startup with the potential for explosive growth, but also with higher risk.
That makes sense.
Yeah.
But how can someone who's not a Wall Street expert figure out which investment strategy is right for them? It can feel overwhelming.
It can.
Especially with all the jargon and all the complex strategies out there.
That's a great question, and you're right. It can feel intimidating. But remember, you don't have to be a financial wizard to make smart investment decisions.
The first step is to be honest with yourself about your risk tolerance. Are you comfortable with some volatility in exchange for potentially higher growth? Or do you prefer a more conservative approach?
So it's all about knowing yourself and your financial goals.
Exactly.
Are you aiming for steady income generation?
Or
are you hoping to hit a home run with a high-growth investment?
Exactly. Once you have a clear understanding of your risk profile, you could start to explore different investment options. If stability is your priority, then dividend-paying companies with a proven track record are a great place to start. If you're feeling a bit more adventurous and want to ride the wave of innovation, then the semiconductor sector offers plenty of exciting opportunities.
It sounds like having a diversified portfolio that balances those different approaches might be a smart strategy.
You're absolutely right. Diversification is key. Don't put all your eggs in one basket. Instead, spread your investments across different sectors and asset classes to mitigate risk. Create a more balanced portfolio that aligns with your individual goals and risk tolerance.
That's great advice. Now, while we've been focusing on these specific investment strategies, let's zoom out a bit and consider the broader context of these trends. We've painted a fairly optimistic picture so far. But we need to acknowledge that there are always challenges and headwinds that could impact these trends.
You're absolutely right. It's important to be aware of the potential risks and understand that no economic cycle lasts forever. Being prepared for potential downturns is just as crucial as capitalizing on the upswings.
So what are some of those potential challenges that we should be keeping an eye on? What could potentially disrupt this positive trajectory?
Well, one of the key concerns is the potential fading of those pandemic-era drivers of productivity that we talked about earlier. As stimulus measures wind down, interest rates rise, and technology investments normalize, that rapid growth we've been experiencing could start to slow down.
So it's like the economy is coming down from that adrenaline rush. And adjusting to a more sustainable pace.
Exactly. And for the semiconductor industry, the heavy reliance on AI demand is something to consider.
Okay.
While the AI revolution is incredibly exciting and driving a lot of innovation,
Yeah.
there's always a risk that the hype might outpace reality,
Okay.
leading to a potential market correction.
It's like we're all caught up in the excitement of this new technology.
Yeah.
But we need to be prepared for the possibility that things might not always live up to the hype.
That's a healthy perspective to have.
Yeah.
We should be cautiously optimistic, but also aware of the potential for things to shift.
So how do we balance that cautious optimism with the need to make smart investment decisions in the present?
That's the art of investing, isn't it?
It is.
It's about staying informed, assessing your own risk tolerance, and making decisions that align with your individual financial goals.
And remember, you don't have to navigate this alone.
That's true.
There are plenty of resources available to help you.
Right.
From financial advisors to online platforms that offer educational content and tools.
Absolutely.
You can do your research,
Yeah.
analyze investment opportunities, and make informed choices that feel right for you.
Absolutely. Investing is a journey.
Yeah.
And it's all about taking those first steps,
Right.
learning as you go,
Yeah.
and seeking guidance when you need it.
And remember, we're here to help guide you along the way. We'll continue to bring you these deep dives into the
Yes.
latest trends and insights,
For sure.
empowering you to make those smart financial decisions.
Exactly.
But before we wrap up this part of our deep dive,
Okay.
let's take a moment to zoom out even further.
Yes, let's look beyond the immediate trends
Okay.
and consider the bigger picture of how these economic and technological shifts are impacting the world on a global scale. Because these seemingly separate threads are actually interwoven, creating a tapestry that reveals a fascinating and complex picture of where the global economy might be headed.
Ooh, I love that analogy of a tapestry.
Yeah.
It's like we're weaving together all these different threads of information to create a more holistic understanding of the world.
Exactly. And that's where things get really interesting.
Okay.
But to fully explore those connections and unravel the hidden implications,
Yeah.
we need to take one final plunge into the depths of these trends.
Don't worry, we won't leave you hanging. We'll be back in a moment to unveil those final insights
Okay.
and leave you with some thought-provoking questions to ponder. Stay tuned for the final part of our deep dive.
Sounds good.
Welcome back. Remember that tapestry we talked about? The one woven from all these economic and technological threads?
Yeah.
Well, let's take a closer look at the bigger picture it reveals. What can we learn about the future?
What's fascinating is that these trends, a resilient U.S. economy, the resurgence of dividend stocks,
Yeah.
and the semiconductor boom, they're not isolated events.
Okay.
They're all interconnected, hinting at some pretty significant shifts happening on a global scale.
Okay, I'm all ears. How are these seemingly separate trends painting a picture of the global economy's future?
Well, let's start with that surprising strength we see in the U.S. economy.
Yeah.
It goes beyond specific sectors like tech or manufacturing. It's about a fundamental shift in how businesses operate and adapt
Okay.
in a world that's changing faster than ever.
So are you saying it's less about which industries are thriving and more about an overall mindset,
Yeah.
a willingness to innovate and adapt quickly?
Exactly. The pandemic, as disruptive as it was, it forced companies to embrace new technologies,
Yeah.
streamline their processes, find creative solutions to those workforce challenges we discussed.
Right.
Those adaptations, born out of necessity, have actually laid the foundation for a more resilient and competitive U.S. economy.
It's like the saying, what doesn't kill you makes you stronger.
Yeah.
The U.S. economy went through a trial by fire and came out the other side,
Right.
leaner and more adaptable.
I like that analogy.
And this newfound resilience in the U.S.,
Yeah.
it has ripple effects across the globe.
It
A stronger U.S. economy
Yeah.
creates opportunities for businesses and investors worldwide.
It does.
And that connects back to those dividend-paying companies we were discussing.
Yes.
Their stability and attractive returns,
Right.
they become even more appealing
Absolutely.
in a world where there's still a lot of economic uncertainty.
Right. They're like beacons of stability,
Yeah.
attracting investors from all over who are seeking a safe haven for their money.
Okay.
And the semiconductor industry, with its explosive growth fueled by AI,
Right.
is another example of how innovation in the U.S. is shaping the global landscape.
Those tiny chips, they really are the building blocks of the entire digital age. It's hard to imagine any part of our lives that isn't touched by semiconductors in some way.
And the companies at the forefront of this revolution,
Right.
NVIDIA, Micron Technology, TSMC,
Yeah.
they're not just U.S.-based companies.
Okay.
They're global players
Yeah.
operating within a complex web of supply chains and partnerships.
So it's not really about national economies anymore. It's
Yeah.
about a global ecosystem of innovation and interdependence.
Exactly.
What happens in one part of the world impacts everyone else.
Exactly. And this interconnectedness
Yeah.
brings both challenges and opportunities.
Okay.
On the one hand,
Yeah.
economic shocks in one country
Yeah.
can quickly cascade across borders.
Right.
Think about how supply chain disruptions
Right.
or geopolitical tensions
Yeah.
can impact the entire global economy.
It's like that butterfly effect.
Yes,
Where even a small change in one place
exactly.
can have major consequences elsewhere.
But on the other hand, this interconnectedness also has the potential to foster collaboration, accelerate knowledge sharing,
Right.
and drive cross-border investment. And ultimately,
Yeah.
that leads to progress and prosperity on a global scale.
So it's a bit of a double-edged sword, but with the potential for positive outcomes if
Right.
we navigate it wisely.
Exactly. And that's where informed decision-making is so crucial.
Right.
Whether you're an investor, a business leader, or just someone who wants to understand the forces shaping our world.
Yeah.
It's more important than ever to stay informed, think critically, and be adaptable in the face of constant change.
It's like we're all on this giant ship
Yeah.
navigating uncharted waters.
Right.
We need to be aware of the currents,
Yes.
adjust our sails, and work together to reach our destination.
I love that analogy. And that brings us to the most important question of all.
Okay.
How will these trends impact you?
Mm.
What choices can you make
Yeah.
in your finances,
Right.
your career,
Yeah.
even your everyday life
Uh-huh.
to navigate these shifts successfully?
That's the perfect note to end on. We've given you a lot to think about today,
We have.
and we hope this deep dive has equipped you with the knowledge and insights you need
Yes.
to not just understand these trends,
Right.
but to actually act on them.
I agree.
Remember, knowledge is power.
It is.
And the more you understand about the forces shaping our world,
Yeah.
the better prepared you'll be to create the future you want.
Couldn't have said it better myself.
Thank you for joining us on this journey of exploration. We'll be back soon with another deep dive into the trends that matter most.
Looking forward to it.
Until then, keep exploring, keep questioning, and keep diving deeper.